Good evening. First of all, I want to thank all of you for coming to listen to me speak about my book. Over the last 6 weeks, since the release of the book, I've spoken in several places, on several occasions, on my book. But this today in Hyderabad is very special because I'm among friends and well-wishers. So thank you very much. I became governor of the Reserve Bank on the 5th of September 2008. Those of you with some sense of recent financial history will note that date, 5th of September 2008. On the 7th of September, Fannie and Freddie fell. On the 9th of September, Countrywide fell. On the 10th of September, AIG came to the brink of a meltdown. 13th of September, Merrill Lynch vanished. 16th of September, the grand finale, Lehman Brothers collapsed, unleashing the deepest, most complex financial crisis since the Great Depression. It took a devastating toll on growth and welfare all around the world. Virtually every country in the world was affected by the crisis, so was India. But in India, there was a lot of dismay, disbelief, denial that we could be affected by the crisis. A number of reasons for that, I don't want to go into them now. But in those early weeks and early months, whenever I used to go around the country, the first question that people used to ask me was, "Sir, when will the crisis be over?" As if I knew. But I used to say, no, the story going around at that time was that the new governor came and brought on the crisis. I played along with that, took that in my stride. So I used to tell them, look, if you think I brought on the crisis will end when my term is over. For good measure, I used to tell them when my term would be over. But here's the thing. The week after I left the Reserve Bank, the crisis ended. Okay? The economy got back on track. Rupee stabilized. Growth started trending up. Inflation started trending down. Anyway, let me come back to my main story. As India was affected by the crisis, I was pushed into managing the impact of the crisis on the Indian economy even before I got my bearings. It was a frightening time all around the world. It was a frightening time in India. It was indeed baptism by fire for me. Baptism by fire is a good thing because you learn on the fast track. But if the fire keeps raging all the time, that's not a good thing. But that's what happened in my case. In the 5 years I was at the Reserve Bank, in the first year, year and a half, there was the global financial crisis. Then for about 2.5 years, we had a very complex, frightening episode of inflation. And in the final year, we had an exchange rate crisis, the rupee tantrums. So that's why the subtitle of my book is actually Leading the Reserve Bank of India through 5 turbulent years, because they were indeed very turbulent years, all those 5 years. At other places, I spoke about what is in the book. But this evening here, I want to speak about why I wrote the book. In the months before I left the Reserve Bank, and in several months after I left the Reserve Bank, people used to ask me, "Sir, are you going to write a book about your tenure in the Reserve Bank?" I was very dismissive of the idea, if only because writing a book looked like a very daunting task. I didn't believe I could take on the challenge. In mid-2014, I took up the position of a visiting fellow at the National University of Singapore, which involved giving lectures on the global economy, on the Indian economy, on central banking, on leadership, on a variety of issues. Students, faculty members, finance sector professionals, others who heard those lectures encouraged me to reduce them to writing. When I started writing, I thought maybe I can write a book, and I bit the bullet, started writing the book in July 2015, and finished that sometime in February this year. I wrote the book with 3 motivations. The first motivation was to explain the dilemmas and challenges that I confronted as the governor during a very complex time, both from a macroeconomic perspective and from a political economy perspective. The second motivation was to demystify the Reserve Bank and tell you why I needed to do that. And the third motivation was to explain the dilemmas in making decisions, making choices in public policy, using the Reserve Bank as a canvas, but illustrating the complex dilemmas in making decisions in public policy at a larger issue. So I want to talk about each of those motivations. I'll speak a little longer about the challenges and dilemmas and speak little briefly about the other two motivations. First, about the challenges and dilemmas. Let's take the global financial crisis as the first example. As I told you, it hit India, tested the leadership mettle of the government, of the central bank. It tested the leadership mettle of all governments, all central banks around the world. Indeed, even veteran central bankers were bewildered about the crisis, not to speak of a greenhorn like me. There were many challenges during that time, but I want to talk about just one challenge, which was, how do I, as the leader of the Reserve Bank, establish my credibility? I recognize that many of you are leaders in your own institutions, in your own organizations. You all understand that one decisive thing a leader requires is establishing credibility. So you might well ask, what is so different about you? What is so different about me, establishing my leadership credentials, was the conspiracy of circumstances that surrounded me at that time. Just imagine the situation. The crisis erupted 11 days after I took over as the governor. I was finance secretary one day in Delhi. Within 24 hours, I became governor. There were finance secretaries before me who became governors, but that was after a gap. I was the first person who went straight from Delhi to Mumbai in less than 24 hours. As finance secretary, I was an unknown unknown. As governor, I became a known unknown. Being an unknown person as governor is not a trivial thing, because the markets size up the man or the woman, hopefully sometime. Understand his style, his language, his personality, his body language, etc. That inevitably takes time. That time was denied in my case. And the market was concerned about whether this guy who has been planted from Delhi, whether he can actually manage this crisis. That is a whammy. But what made it a double whammy was that I started with low credentials. Why, as I told you, I was finance secretary and then became governor. Dr. Y.V. Reddy, who was governor before me, established a very formidable reputation for standing up to the government, for preserving the autonomy of the Reserve Bank. And then here I was transplanted from Delhi to Mumbai. The story going around at that time was that the government sent Subbarao to Mumbai to act at the bidding of the government in the Reserve Bank. So I had to live down that reputation, establish my credibility. So whatever we needed to do at that time, the perception used to be that the government was giving instructions. And the crisis required the Reserve Bank to work very closely with the government, which actually strengthened this perception. All around the world, central banks and governments were working very closely together, unusually closely together during the crisis. But in India, the story going around was that this new governor has come and is surrendering the autonomy of the Reserve Bank to the government. That was the double whammy. Here's the triple whammy, which was that my credibility within the Reserve Bank itself was very low, because even the Reserve Bank staff did not know me. So they were sizing me up themselves, and must have been influenced by what is the market perception. And the crisis required that the Reserve Bank do some very unusual and unconventional things. For example, we established a line of credit from the Reserve Bank for mutual funds or non-bank finance companies. Orthodox Brahminical central bankers would say, how can you do that? A central bank never does that. But the crisis required that we do that. But within the Reserve Bank, that strengthened or somewhat gave some credence to the perception that this new governor has come and is making us do unconventional things because the government is instructing him to do all this. Notwithstanding the fact that all around the world, central banks were doing unconventional things, they're indeed still involved in doing unconventional things. So that was the challenge of establishing credibility that I had in the first few months, or indeed the first year of my tenure in the Reserve Bank. What's a matter of enormous satisfaction to me is that in the 100-day evaluation of my tenure as governor in December 2008, the consensus opinion was that Subbarao handled a very turbulent period with intelligence, professional integrity, and exemplary calm. Okay. That is the first challenge. I'll give you another example. As I told you, we moved from the crisis to a complex episode of inflation. We recovered from the crisis sooner than most other countries. Indeed, many countries are still in the crisis. We recovered sooner than most other emerging economies, but inflation too caught up with us. It was not an ordinary episode of inflation, but an extraordinarily complex episode of inflation that was persistent, stubborn, and high for about 2.5 years. I don't want to go into the drivers of that inflation here, but what I want to tell you is the dilemma that any governor faces in such a situation, or the dilemma that I faced. What does a central bank do when there's inflation? You run a tight monetary policy, you keep interest rates high, right? But when you keep interest rates high, that hurts growth. And we were at a time when growth was very important. We had not recovered from the crisis. Recovery was still very fragile. So this tension of managing this tension between growth and inflation was a big challenge. This is a challenge that every central bank confronts. It was not unique to me. It is not unique to the Reserve Bank. It is not unique to India. It is not unique to my time. Every central bank, every governor, every country, many times faced this tension, faced this challenge of managing the tension between supporting growth and restraining inflation. What is unique to my circumstances was that we had high inflation and moderating growth at the same time. Normally, when you have high inflation, typically you have the economy overheating. High inflation typically accompanied by high growth. But this was a situation when we had high inflation, stubborn inflation, accompanied by decelerating growth or weak growth. So managing this tension became a particularly more compelling challenge. What complicates judgment in managing this tension is that different constituencies want different things. In 2009-10, the Reserve Bank was celebrating its Platinum Jubilee. As part of the Platinum Jubilee, we had events all around the country, including here in Hyderabad. But one event I'm referring to now is what we did in Chennai, a town hall meeting around 7 p.m. like this on the steps of the Egmore Museum. There were about 300 people pulled literally off the street. Middle-aged people, middle-class people, young professionals, all were there. I and my 4 deputy governors were there. It was a nationally televised show, and we were fielding questions from the audience. And the questions were very predictable, that banks charge us very high rate when we borrow. They don't give us a high enough interest rate on our deposits. They don't give us good service. We have to wait for long hours. They don't give us proper answers. All sorts of typical complaints against banks, typical complaints against the Reserve Bank. Around halfway through the show, when we were about half an hour into the show, it suddenly struck me, I took an audience poll. So I said, how many of you in this audience here want the Reserve Bank to maintain a low interest rate and support growth? About half the hands went up. Then I said, how many of you want the Reserve Bank to run a tight monetary policy and restrain inflation? About half the hands went up. That's no surprise, right? Half, okay. But it struck me literally on my feet that there was a very clear distinction between the two groups. People who wanted the Reserve Bank to restrain inflation were the middle-aged people, middle-class people, low-income people who had to run a family, run a budget. They wanted inflation to be low. People who wanted the Reserve Bank to support growth were typically the younger people in the 30-35 age group, youngsters, young professionals who had a long horizon to look to, whose career prospects depended on growth picking up. So there was a very clear division. There were two different constituencies that was represented, the symbolic of what across the country, different constituencies wanting different things. I went to Chandigarh once. I met the Pensioners Association. I'm a pensioner myself now. So what do pensioners want? Pensioners want high interest rate because typically they have a savings bank account, they have fixed deposits, that's their possibly the only avenue of saving, so they want high interest rates. After that meeting, back to back, I went to meet the Medium and Small Industries Association of Chandigarh. What do they want? They want low interest rates because they're typically borrowers. So you have two constituencies within the society who want the Reserve Bank to do different things. That's the challenge of managing the tension between supporting growth and restraining inflation. Let me give you another example. I talked so far about the global financial crisis. I talked about restraining inflation. Now I'll talk about the exchange rate, which is my challenge in the last year of my tenure at the Reserve Bank. Those of you who can recall, we had the taper tantrums, driven or engineered or triggered by a statement by Chairman Bernanke of the US Federal Reserve that they were going to taper and eventually stop quantitative easing. That shouldn't have surprised anyone because quantitative easing, everybody who knew about quantitative easing knew that it had to be tapered and unwound at some time. But global financial markets acted so surprised that reaction was so ferocious. Exchange rates of emerging economies went for a tumble. There was carnage in our external sector. The rupee depreciated by about 17% peak to trough in about 4 months. I will not go into all the causes about why the rupee depreciated so much, so violently. There were both proximate causes, structural causes. But what I want to tell you here is when the Reserve Bank or when any central bank tries to manage the exchange rate, the most important thing is to manage expectations. Indeed, anything that a central bank does, whether it's controlling inflation, managing the crisis, managing the exchange rate, the main problem or main challenge is to manage expectations. Managing expectations is a difficult thing in normal times. It's especially difficult during crisis times. I'll give you an example. In mid-July 2013, I raised the interest rate, repo rate and the MSF rate, though the technical details are not important, but I raised the interest rate with the explicit and express purpose of managing the volatility in the exchange rate. That's a very unusual thing to do because most central banks, indeed no central bank admits to using exchange interest rate to manage exchange rate. Most central banks don't do it. In the Reserve Bank, we've never used interest rate as an instrument to manage the exchange rate. We use the interest rate as an instrument to manage inflation, manage growth, manage financial stability, but not to manage exchange rate. So what I did on July 15, 2013 was very unusual. The intent behind that was twofold. The first was to squeeze liquidity out of the system because we were getting reports, intelligence that there was too much liquidity that was fueling speculation on the rupee, especially in the non-deliverable markets in Dubai, in Hong Kong, and in Singapore. We wanted to squeeze that liquidity. That was a straightforward purpose. But an indirect, but at that time an explicitly stated purpose of that move was to convey to the markets the Reserve Bank's resolve to defend the exchange rate. That night on the TV channels, the next morning in the newspapers, there was commentary on this, there was criticism on this. That also came at a time when growth was moderating. There was a lot of concern about how this increase in interest rate at a time when growth was moderating very steeply. Recall that policy paralysis, etc. at that time, 2013. So a lot of people expressed concern about how this decision, policy move by the Reserve Bank might hurt growth. There was a scheduled media conference that afternoon, and I expected this question. Quite unsurprisingly, the first question was, so won't your move of raising interest rates, will that not hurt growth? I was quite prepared, so I said yes, the Reserve Bank is quite sensitive to growth concerns, but we've had to do this in order to defend volatility in the exchange rate. We will withdraw this measure as soon as the rupee stabilizes. That's a very straightforward answer. That's exactly what we wrote in the written statement. The market reaction was brutal and unforgiving. The rupee tumbled by about 3% in 3 hours. We were trying to manage expectations, and expectations defied our understanding. Why did the market behave like that? I agonized that evening. I consulted with my senior management. I slept over it. And what I was told was that I made 2 mistakes. The first mistake I am alleged to have made, which I think is somewhat correct, is that the market was expecting the governor to show undivided concern, undivided focus on the exchange rate. By mixing up growth with exchange rate, I was fumbling communication. It was no matter that the analysts talked about growth, but the market expected that the governor would just talk only about the exchange rate, exclusive of all other concerns. The second criticism against me was that I sounded very apologetic about defending the exchange rate. I should have sounded assertive, I sounded apologetic, I should have sounded certain, I sounded uncertain. So I asked some people who were close to me, what should I have said? They said, instead of saying that we will withdraw this measure when the rupee stabilizes, you should have said, we will not withdraw this measure until the rupee stabilizes. That's more assertive. Okay? Then some people said that the governor is not alpha male. Now, what is an alpha male? Who is an alpha male? I don't know. I Googled and I'm still confused. Okay? At this point, I'm not even sure whether not being an alpha male is a badge of honor or a certificate of weakness. But I'll leave it there. But what I want to say is that communication missteps, again, were not unique to me. Every governor around the world admits to having had some rude shocks from the market. Some of you may have read Bernanke's book, The Courage to Act. He admits to how he was bewildered, in fact, shocked by the reaction to his statement on taper tantrums. Greenspan admits to that. So, last August, in China more recently, August 14 last year, you might recall that China tweaked its exchange rate peg. Markets around the world reacted very ferociously. I don't know how many of you read that statement from People's Bank of China. It is written in very straightforward English. Okay? Even an 8th class student can understand that. But why these market experts looked beyond the English, looked between the lines and got frightened and reacted so frighteningly is an enigma. I'm sure that Governor Zhu Xuan of People's Bank of China must have been very, very shocked and confused about the market confusion. So that's the first motivation for writing the book, explaining my challenges and dilemmas. I now want to talk about the second motivation, which is to demystify the Reserve Bank. Why did I want to demystify the Reserve Bank? I wanted to demystify the Reserve Bank because there's a lot of negative stereotypes about the Reserve Bank. Now, a lot of people think that all that the Reserve Bank does is print currency. I used to go to schools as governor. Little children would ask me, they would recognize me as the governor, recognize me as the person who signs on the currency. They say, oh, okay, the governor goes to office and signs the currency from morning to evening, and we're not having enough money because he's slow in signing. Okay. Some of the older children would look askance at these younger lots and say, how can you ask such a stupid question? But their question would be, so why don't we print more currency so that we can become a rich country? I'm sure many of you, all of you have children, try explaining to your children why you cannot become a rich country just by printing more currency. An extremely difficult question to explain to children, even to adults sometimes. Okay. Reserve Bank does, of course, print currency, but it does a lot of other things. It's the monetary authority of the country. It regulates banks, non-bank financial systems. It regulates the payment and settlement system. It's the gatekeeper of the external sector. It's got a lot of development functions. People understand that there is the Reserve Bank here, there in Mumbai, that is doing some complex things that have an impact on us. But they fail to understand the connection between what the Reserve Bank does and on their daily lives. What the Reserve Bank does affects people's everyday lives. The prices you pay in the market, the interest you get on your savings deposit, the interest you pay if you take a housing loan, how much of foreign exchange you can take out if you were to send a child abroad for education. How safe is your money in a bank? When you make a transfer on NEFT or on RTGS, how safe is it? All these things are impacted by what the Reserve Bank does, and my endeavor was to explain to people the connection between what the Reserve Bank does and the impact on their lives. But there was also a deeper motivation for my wanting to demystify the Reserve Bank, because as I said, there's a negative stereotype view about the Reserve Bank, that it's an unbending, rigid institution that has no idea of the realities of India. That's wrong, actually. The Reserve Bank has some of the best people in the country. They understand the country. They understand the realities of the country. But the perception around is that the Reserve Bank is a very, very rigid institution. I was in the IAS for 40 years. So even from my early career, this perception that the Reserve Bank is a negative institution was drilled into me. My first posting as an IAS officer was a sub-collector in Parvatipuram in Srikakulam district at that time, North Coastal Andhra. Some of you might know that Srikakulam district in Andhra Pradesh was the first district in the country to be affected by the extremist movement outside Naxalbari in the late 60s, early 70s. By the time I went to Parvatipuram, Srikakulam district, the extremist movement was on the wane. So our task was to rebuild the rural economy, tribal economy. Tribals had become vulnerable to extremist influence because they were exploited. They were exploited by money lenders, they were exploited by the forest guards, they were exploited by the government machinery, by everyone. So our endeavor was to improve their incomes, improve their opportunities, so that they weaned away from extremist influence. As sub-collector, I used to go from one branch of a bank to another branch, canvassing loans for tribals. Branch managers, there might be some branch managers here, they were quite wary of lending to tribals. They did what they could, but beyond the limit, they would fob off the sub-collector. The young fellow doesn't know. So they would give one excuse after another why they cannot lend anymore. When all excuses fail, the final thing they would say is, the Reserve Bank regulation does not permit us to lend beyond this. That's the Brahmastra. Once you say that the Reserve Bank does not permit you, there's no answer to that, right? That was my first exposure to the Reserve Bank. Indeed, some educated people, even they believed that the problem of tribal welfare is actually the Reserve Bank. The first thing to be done is to disband the Reserve Bank in order to improve the lot of the tribals. So I wanted to remove those negative opinions about the Reserve Bank, and that's the reason I wanted to demystify the Reserve Bank. Let me now move on to the third motivation for writing my book, which was to explain the dilemmas in making public policy decisions, not just in the Reserve Bank, but everywhere, but I'll give an illustration from the Reserve Bank. In 2010, we're all in Hyderabad here today. You would recall that there was a backlash against the microfinance sector here in Andhra Pradesh, combined state of Andhra Pradesh at that time. The grievances, complaints against the microfinance sector were many, but if you just distill them, three main grievances. First, that the microfinance industry was charging usurious rates of interest. Second, that they were resorting to coercive recovery practices. And third, that they were loading one loan after another on low-income households, making them indebted beyond their capacity. The Reserve Bank, as the regulator of the large microfinance institutions, our neck was on the block. I must admit that there was some lapse on the part of the Reserve Bank because we were focusing more on financial stability and to some extent lost consumer protection from our radar screen. In any case, we agonized over it. I met with Chief Minister Rose at that time. The Prime Minister also had asked me to do something very urgent about it. We appointed a committee, and the Malegaon committee made some very sensible, reasonable recommendations. The most important recommendation they made was that we must cap the interest rate that microfinance institutions can charge. That's a very logical thing to do, right? Very straightforward. Anybody confronted with that issue would say, okay, if they're charging usurious rates of interest, just cap the interest rate. But that was a very difficult thing for me to do. A very, very challenging thing for me to do. I'll tell you why. From 1991, when we started the blitzkrieg of reforms, the Reserve Bank dismantled the interest rate structure. Those of you who can recall the period before 1991, you would recall that practically every interest rate in the economy was determined, was regulated, was handed down by the Reserve Bank. How much you can charge small farmers, how much can you charge big farmers, how much the small industry, big industry, how much for a deposit of 7 years, how much for a deposit of 7 days. Every interest rate was regulated by the Reserve Bank. Over 25 years, that interest rate structure has been gradually dismantled. The only remnant of that until 2010 was the interest rate on the savings bank account. Several governors before me had contemplated dismantling that also, deregulating that also, but the circumstances were not appropriate. Even in 2010, I was told, or some people told me, that the circumstances were not appropriate. In any case, I bit the bullet after consulting a variety of stakeholders and deregulated the interest rate on the savings bank account. That is hailed all around by hundreds of millions of middle class families in the country. A lot of people actually wrote me letters that regardless of what else you have done or have not done, this will be a lasting legacy. My lasting legacy yet to be determined because nothing happened to savings bank interest rates. Okay? But regardless. Now the challenge was this. I did that sometime in May 2010 or July 2010, I think. And in November 2010, in about a space of 5 months, I was called upon to reverse that dismantling of the interest rate structure. I had been hailed as the hero who deregulated, who completed the deregulation of the interest rate structure in the economy. And here I was reintroducing interest rates. And my fear was not so much about my legacy. My fear was that whether this might become the thin end of a wedge when we would restart the whole process again, reversing all the reform that had been done over 25 years. Anyway, once again, I decided to accept the recommendation and we capped the interest rate. So far it's been going on okay. I actually long to meet microfinance people because I want to check with them what impact this has had on their business and on their business satisfaction. So that's my book, 3 Motivations, explaining the challenges and dilemmas that I confronted, demystifying the Reserve Bank, and explaining the choices, the dilemmas in making choices in public policy where there is no black and white. Everything is gray. I spoke also in the book about the differences that I had with the government. Those of you who have read the book would note that that's only about 10 pages in that 300-page book. But the media flashed that as if the whole book is about my disagreement with the government. But that's okay. What I want to say here is that yes, I had differences with the government. There was pressure put on me. But I was not trying to be holier than thou. It was not my intention to say that the government was right and the government was wrong and the Reserve Bank is right. I was not making a value judgment. I was just saying that we had differences of opinion. Indeed, differences between central banks and governments are not unique to India. They're typical across most countries, indeed becoming increasingly common. What is unique to our country is that we have no proper mechanism for managing those differences. Since I'm speaking under the auspices of Manthan, perhaps from the exact same platform, I must also respond to a comment made by former Minister, Honorable Member of Parliament, Sri Jairam Ramesh, who spoke, I believe, at this forum a couple of months ago. And he made a statement about my book as reported in the media. I was not present at the talk, but I'll just read the short paragraph statement that he made. So this controversy, which now Dr. Subbarao has also entered, is most unnecessary because ultimately the finance minister has to weigh so many considerations, whereas the governor of the Reserve Bank of India can afford to be single-minded in his approach. Prime ministers cannot, finance ministers certainly cannot afford to be single-minded in their approach. So I think Dr. Subbarao has not done, so I think Dr. Subbarao has done grave injustice to his political masters. That was the statement made by Mr. Jairam Ramesh. I agree with the characterization that Mr. Ramesh made, but I don't agree with the inference that is drawn. It is true that governments have several concerns. It is true that a central bank has one primary concern, but that's exactly the point. Precisely because governments, not in India but across the world, have many concerns, you need a central bank with a single primary concern. Precisely because governments have a democratic mandate, a very wide mandate, you need a central bank with a very focused mandate. precisely because governments typically tend to take a short-term outlook. You need an independent, apolitical central bank to take a long-term outlook. Let me explain why that is important very briefly. The central concern of a central bank is stability, maintaining stability, price stability, macroeconomic stability, and financial stability. Governments typically cannot ensure stability because they have, as Mr. Ramesh said, many concerns. Typically, they tend to be biased towards short-term results, even if that might compromise long-term sustainability. Why do central banks focus on stability? Because stability is the bedrock for long-term sustainable growth. So that's exactly the reason why, when you have a government with several concerns, with a very wide mandate, you need an independent, apolitical central bank with a narrow mandate, with a focused concern. Mr. Ramesh said Mr. Subbarao has not done justice to his political masters. I don't understand what he meant by that. But what I want to say is that the job of the governor is not to do justice to his political masters. The job of the governor is to do justice to the larger public interest. So let me conclude now. My book is not so much to defend my record, but to explain the circumstances in which I had to act. It's not an attempt to reshape the narrative, but to explain the issues, context, which in the first place shaped that narrative. I enjoyed writing the book, and I hope all of you enjoy reading the book. Thank you very much.
So what will be, you foresee any, sorry. Do you foresee any bubble in the next near future, whether housing or NBFCs? What's your...
I have no answer. As governor, as central bank governor, I could not have answered this question because I should not have. As ex-governor, I can't answer this question because I don't know. Okay. Some of you may have come across this book, Rogoff and Reinhardt. What's it called? I forget the title of the book. No, Rogoff and Reinhardt. It's about 800 years of crisis. They've reviewed financial crisis over 800 years. This time is different. This time is different by Rogoff and Reinhardt. And they've reviewed 800 years of financial crisis, 800 years. What they found was that every crisis over the last 800 years was triggered by the same fundamental causes, as if we never learn from one crisis to another. Also, that notwithstanding commentary to the contrary, most crises were not foreseen. So it will be difficult for me in this public forum to say whether there will be a crisis or a bubble.
So I was just listening about the point you said that you wrote 10 pages about some discrepancies you have with the government. Even what even I see, Mr. Rajan also had these kind of discrepancies. So and the differences. So I was thinking, what are the basic things you think about when creating a monetary policy or a credit policy, which most of the time government officials doesn't like it, and they say that RBI is not helping government or...
No, just what I explained just now, which is that typically governments, especially democratic governments, have electoral compulsions. Their overview runs from one election to another, which is understandable. It's not just in our country, in every democracy that's the case. So they tend to take a short-term view. They want to generate jobs, create growth. Whereas a central bank typically takes and is enjoined to take a long-term view. And that creates the tension between governments and central banks. Dr. Reddy is here. Sometime he will speak about it, or he has perhaps spoken about it. Governor Rajan might sometimes speak about it. I cannot speak for them. But I was speaking about my own time and my own experience, which was that especially during that time, when growth was moderating, inflation was high, was a very toxic combination of circumstances. Now, I recall some of Dr. Reddy's time. We had high inflation towards the end of his tenure, but that was also a growth boom, right? That was a difficult challenge, but not bewildering challenge. But when you have growth moderating and inflation persistent and high, that's bewildering. And that accentuates the tension between government and central bank.
So my question is, just now you broached upon the electoral compulsions of governments. Recently, the two state governments of Andhra and Telangana indulged in a loan waiver for farmers, which RBI was very critical about. How do you foresee this, sir? I mean, what is the solution for this? Out of electoral compulsions, Chief Minister's waive off the loan for farmers. And RBI is critical about that. So, what is the via media approach for this?
Now, as I told you, there is no via media approach. In public policy, there's no black and white. You've got to make a judgment call. And the Reserve Bank under Governor Rajan took the position, and in my view, quite rightly, that loan waivers tend to encourage indiscipline among borrowers, and that the root cause must be addressed, which is the distress among farmers, rather than encouraging banks or pressurizing banks to lend and then write off the loans or give a remission. So it's a complex problem. I wish I had a straightforward answer, but the root cause is to manage, eliminate if possible, or certainly minimize the distress in the farm sector.
How much of, why is it that in central banking, that the central banker is so important, whereas everywhere else we talk about the institution, but in all our rhetoric we say, this is what the governor is saying, this is what the governor is doing, this is what the governor is thinking. Why is it that the governor has...
No, I don't agree with you, because I worked in the state government. State governments are so chief minister centric, right? I mean, the chief minister is the face of the government. But to some extent, you're perhaps right that the governor personifies the institution of the central bank. It wasn't always like this. In fact, the dictum to central bank governors used to be that they should not be seen, they should not be heard, they should only be read. Okay? The traditional advice to central bank governors should be that you should not speak up. Your policy should speak for what you're doing. In fact, this book, Lots of Finance, Liaquat Ahmed, has written a book about central bank governors. The advice to central banks used to be what many of your parents, when guests are coming to your house, what do you tell little children? Don't say anything, but if you have to say anything, make sure that you say only nice things. If you have no nice thing to say, don't say anything at all. Similarly, the dictum to central banks used to be, don't say anything at all, because if you open your mouth, it means that there is some distress, there is some something unusual happening. It's a signal of concern. Okay? But that's gone now. Now central banks are very important. The face of the governor is important because communication has become a policy tool. Communication by central banks used to be an aid to policy, but now communication has become a policy tool by itself. like US Federal Reserve said, right, that we will keep this extraordinary easy policy over an extended period of time. Those 5 words, over an extended period of time, did remarkable things to calm markets around the world. Janet Yellen more recently said that we will be patient. We'll be patient with raising rates. About a year ago she said. You know, that one word, patient, was, I think, one of the most researched words in recent history. Because what exactly did she mean by patient? What was her body language when she said we'll be patient? So, in as much as communication has become a policy tool, and the governor is the face of the central bank and is the medium for communication, the governor has become a symbol of the institution. But I also want to correct the stereotype view that it's the governor who brings all the wisdom to the institution. That's not true. Certainly it's not true of the Reserve Bank. The Reserve Bank is a great institution, a tremendous amount of intelligence, professionalism, and insight. And the governor does make a difference as a leader.
Hi, sir. My name is Sarla, and I'm a second-year law student at Nalsa University. My question is this. Sir, how do you reconcile the importance of overcoming barriers such as social inequalities, education, hunger, and more specifically gender disparity and equal access to women? How do you reconcile the importance of that in terms of India's economic and developmental growth?
Well, the answer is straightforward. All the disparities, inequalities, inequities have to be addressed because growth has no meaning, growth has no justification if it does not benefit all members of society, particularly if it does not benefit low-income households. Because growth has rationale, meaning, basis only if it benefits those who most need growth. But I want to turn your question into a central banking context. While there is no question that governments around the world have to be concerned about equity as much as they address growth, in central banking there is today a debate about whether they should be concerned about equity. Because what the central bank does has impact on equity. Inflation, for example. Inflation is a regressive tax. Inflation hurts poor people more than it hurts relatively well-off people. All of us here, we are fortunate members of our community, our society. We are well-off. We can attend a meeting of Manthan. But there are hundreds of millions of poor people in the country who are hurt by inflation, right? So, the Reserve Bank or any central bank, when it tries to control inflation, it actually is addressing an equity concern, a very silent but a very dominant equity concern. However, some things that central banks do disturb equity. For example, quantitative easing done by the US Federal Reserve. The debate about that, among many issues, one of the main issues is that it helps people who are already well off. Because one of the purposes or intended objectives of quantitative easing is actually to raise asset prices. Who has assets? Relatively better off people, right? So the criticism against, one of the many criticisms against quantitative easing is actually that it is a reverse Robin Hood type policy, robbing from the poor to pay the rich. Of course, Bernanke and others have responded to that criticism, but within central banking circles, today there's a debate about whether they should be absolutely dispassionate, unmindful of equity concerns, be focused absolutely on stability, or whether they should also be concerned about equity.
Mr. P. Chidambaram of late had commented that during his time, he had continued with the stimulus for a longer period, which had probably increased the inflation to about 13% or whatever. I would like your comments on that, sir.
I don't know what Mr. Chidambaram said. I'm only hearing it from you because Mr. Chidambaram left the finance ministry in November 2008, shortly after the terrorist attacks in Mumbai. And that was just about 2 months after the crisis erupted. So he wasn't the finance minister for much of the period during the crisis, except in the first 2 months. But I want to comment on the general issue that you raised. It is true that we continued with the stimulus, both fiscal stimulus and monetary stimulus. And with the benefit of hindsight, it now looks very clear that we continued with that beyond what was necessary. But mind you, what's important is that this is with the benefit of hindsight. In the universe of knowledge we were operating at that time, with what we knew at that time, would we have done anything different? Perhaps not. What was the data telling us? Data in real time was telling us that the growth was yet to recover, but inflation was picking up. All around the world, financial markets were still jittery. Markets in Europe and America were still recovering from the global financial crisis. Meanwhile, the Eurozone debt crisis was brewing. So there was concern about financial stability. There was concern about growth being very fragile. So we had to maintain the stimulus. Now, from 2013, 2014, 2015, it looks very clear with 2020 vision of hindsight that yes, we continued that for period beyond necessary, but it didn't look very clear. Indeed, it did not look at all clear in 2009 and 10.
May I? Okay, after Mane.
Okay.
There's some people right back at there. Yeah. You're looking beyond, right? Okay.
Good evening, sir.
Raise your hand. Okay, thanks. Yes.
Good evening, sir. You spoke of, in the last year of your tenure, the rupee depreciated and there was a lot of hoo-ha about the process of the rupee going down. My question is that an overplayed concern? While a certain amount of stability in depreciation would certainly be desirable, the very fact of depreciation of any currency, is it necessarily bad? Because at the end of the day, just as you have a dichotomy between growth and inflation, here you'll have a dichotomy between the advantages of depreciating rupee for the exporter and hence growth, vis-a-vis the problem of somebody coming in with the imports at a higher cost.
Sure.
So is it really bad?
Now I have a good answer for your question, okay, which is that just like you said, growth, inflation, the different constituencies, even about exchange rate, there are different constituencies. There was a time in our country when we used to look upon a strong exchange rate as a symbol of strength and a weak exchange rate as a symbol of weakness. No, that there were some governments which thought that an appreciating rupee was shushpa, that we were showing our strength, and a weakening currency was a sign of weakness. Over time, we become quite agnostic. Indeed, our political class has also become quite agnostic about the exchange rate. We no longer take an emotional view about the exchange rate. We let it depreciate. We let it appreciate. Indeed, there is constituencies against depreciation of the exchange rate. In the last year of Dr. Reddy's tenure, when I was finance secretary, we had exchange rate appreciating, and that hurt exporters, and exporters were agitating about weakening the rupee. So we actually wanted to weaken the rupee. I'm saying that just to tell you, illustrate to you that we now take a very practical, interest-based view of the exchange rate rather than an emotional view. Now, the second part of your question is, it's not as if the Reserve Bank tries to manage the level of the exchange rate. What the Reserve Bank tries to manage is the trajectory of movement of the exchange rate. If the exchange rate has to fall from 55 to $1 to 65, so be it. And we wouldn't know in real time where it would go and stabilize. But the important thing is when it's moving from 55 to 65, that the trajectory is non-volatile, does not create avoidable instability. So the endeavor of the Reserve Bank, the stated endeavor, and I can tell you from within the system, the internal endeavor of the Reserve Bank is to manage the trajectory of adjustment, not the adjustment itself. Yes.
Sir, my name is Raghavendra Joshi. I'm currently pursuing my CA final. My question to you is, where do you see the US interest rate in next 1 year, sir? And
I think Janet
Yeah.
Yellen will be patient, as she said. So beyond that, I don't know.
and where do you see the global economy in 1 year, next 1 year, sir? Global economy.
Where do I see global economy?
Yeah.
Global economy, I think, will improve. There are pressure spots. There are problems in Europe. There's problem in Japan. America is still tentative. There is issues about the UK, Brexit, etc. Emerging markets are slowing. China, you've got to understand China by counting tea leaves. So there is a lot of uncertainty in the global economy. But what I do know, what I believe is that we're unlikely to see a crisis of the Lehman Brothers collapse type. We are also unlikely to see a crisis of the type of the Eurozone sovereign debt crisis. There would certainly be localized problems, pressures. Even China, I believe, will manage the adjustment, notwithstanding all the fears about it. China has problems, but I think they will manage the adjustment. So the global economy will improve, but only modestly and hesitantly over the next 1 year.
While considering the present banking industry situation, our Indian banking industry is able to cope up with the Basel III implementation.
You're asking me if they'll cope with Basel III implementation?
Yeah.
Yes, I think they will, but it's going to be very difficult. You know, I've seen several estimates about what it will cost to recapitalize our banking system. In 2012, when I was still in the Reserve Bank, Basel III was just about very fresh. I asked our staff to make an estimate. A back of the envelope calculation at that time was we would require $90 billion to recapitalize the Indian banking sector, both public and private. Subsequently, we had a more refined understanding of Basel III. We also have some understanding, although not complete understanding, of the stressed asset problem, stressed balance sheet problem of banks. But the estimate of how much is required has varied. It had gone down to as low as $26 billion, then gone up to 60, 70, 80, and people are again talking about $90 billion. Before the budget, in February sometime, the government said that the public sector banking system would require about $26 billion, and that the government contribution has to be $10 billion. And Governor Rajan has endorsed that number. Now, I believe that that's an underestimate. 26 billion is too small a number to meet the recapitalization requirement of the banking system. It's way above that, but I don't know the exact number. It's going to be very difficult, extremely difficult, for the government to mobilize the capital required given the fiscal constraints. So it's going to be a complex challenge.
Good evening, sir. My name is Subramaniam. I have a question for you. We all know that currently all the public sector bankings are facing problem of NPA. And cleaning of the balance sheets of banks is initiated in the year 2015. And in the recent event, you also said, even as when I was writing my book, I was not very sure that I have anything to add to public disclosure except to say that some of the causes of present crisis owe to action or inaction of RBI on my watch. So I would like to ask you, what was
Where are you reading that from?
Economic Times?
Okay. They're quoting me, right?
Sir?
Were they quoting me?
Yes, they are
Okay.
quoting you.
Okay.
So
yeah.
my question is, what was your view on NPA when you were Reserve Bank governor?
Okay. The NPA problem started sometime in 2010, 2011. We noticed that. The markets noticed it, the banks noticed it. The Reserve Bank supervisors wrote that in their reports. We used to discuss that in our internal meetings. How big the problem was not clear at that time. There were many causes for the NPA problem. Some of the causes are now clear. At least one of the causes was developments on my watch as governor in the Reserve Bank, when during the crisis we had encouraged, indeed, exhorted banks to restructure loans aggressively. So in that restructuring, some of the insolvent accounts may also have been restructured along with illiquid loans. But that was only one of the causes of the NPA problem. There were many other issues. Subsequently, there was we forayed into the infrastructure sector. It was uncharted territory both for banks and for investors. There was Supreme Court orders against several projects, against several industries. There was implementation bottlenecks. There was also a bit of crony capitalism. But to believe that the entire NPA problem is because of crony capitalism, I think is wrong. I'm not saying that that's not one of the reasons, but that's only one of the reasons. So the answer to your question was that the NPA problem was recognized by the Reserve Bank, but it grew in size. Then as it came to light, we realized, everyone realized that the problem was much larger than first thought.
Praveen here, the faculty for CA final. I have a question, sir. More than 30% of global bonds are quoting at negative yields today, which never happened in the past 200 years. So where do you see when the interest rates takes a U-turn from now? Where do you see the global economy landing?
I don't know. I don't know. See,
sir, please.
Do you know that the fastest growing segment of financial markets today, some of you are CAs and many of you doing CA, the fastest growing segment of financial markets today is the market in negative yield bonds. Okay? So it's a very counterintuitive thing that you go to deposit money in a bank and you have to pay for it. So even 2 years ago it looked like outlandish idea. Today it's part of conventional wisdom. Where do we go? People are talking about helicopter money. I'm sure you heard about it. That's helicopters going from the air and dropping money so that people attending Manthan meetings like this can pick up money and go home and spend it. And it's in the realm of possibility. Okay? My own view on all these unconventional policies is that they're good for repairing broken financial markets. They're not good enough for stimulating economies. So you do more and more of unconventional monetary policy by central banks because something is being done while the governments step back and don't do their bit. You're not resolving the fundamental problems. In Japan today, for example, the problem is deeply structural, right? So Japan has to do all the three arrows, not just one arrow. But all that they've been doing is one arrow of Prime Minister Abe. But Japan's problem also, it's very surprising, very counterintuitive, but the country which records the fastest growth in per capita income today, which country is that? Japan, right? Japan has the fastest growth of per capita income in the country. I don't know how many of you go to Japan, how often. I've been going to Japan once every year for the last 10 years. You go to Tokyo markets are full, there's lights, people, they're crowded, they're as crowded as our malls. So you don't think that that's a country that is close to a recession, that's close to deflation. So Japan is an enigma, but Governor Kuroda is talking about helicopter money. Some governors are swearing by not doing helicopter money, but I don't know about negative interest rates and helicopter money.
Good evening, sir. My name is Divakar. I'm an IT professional. You are mentioning about the borrowing of tribals in Srikakulam, and the bank manager comes and say that probably they were asking for few thousands of rupees. They were saying about RBI regulations, and there are few businessmen from Bangalore, probably airline industry guys, who has gone up to 9,000 crores and defaulted. And always we hear RBI interference after the crisis, damage happened. It is for crisis management or firefighting only RBI enters, but prior to that, damage would have been happened. Is there any mechanism for that?
Look, it's not appropriate to talk about a specific issue in a public meeting like this. It is true that some loans have gone sour. It is true that there was some, what should I say, not proper appraisal of projects, or a loan decision was not taken on appropriate criteria. But that's just one example. It's not just about the Reserve Bank, but it's about governments in general, about public institutions. Every time something comes to light, people say, oh, the government has been sleeping, the Reserve Bank has been sleeping. Okay? Every time extremists attack a police station or a railway station, the charge is that the police are sleeping. Every time there's a terrorist attack, the charge is that our enforcement machinery is not working. You don't realize how many terrorist attacks, how many Naxalite attacks, how many bank collapses have actually been prevented by public institutions because they don't come to light. Newspapers don't write about them. So I want you to understand that yes, there are lapses, there are shortcomings on the part of public institutions, certainly on the part of the Reserve Bank. But to surmise from that these institutions, these governments are sleeping at the wheel all the time is, I think, both unjustified and unjust.
Sir, good evening. Yesterday, RBI governor has said that it is better for the government to give subsidy to certain industries like infrastructure. Now, government is already giving subsidies to certain industries like airlines, RTCs, electricity boards. With all due respect to the RBI governor, does it not sound unusual that give subsidy, advising government to give subsidy, and the...
No, please sit down, I understand your question. You have to understand Governor Rajan's comment in the appropriate context, because I faced that, Governor Reddy faced that as well. Infrastructure is a big priority for our country. We need to spend $1 trillion on infrastructure in the next 2-3 years. We've been talking about that for the last 10 years. The amount has been going up, investment has not taken place. There is pressure on the Reserve Bank to loosen regulation on banks so that banks are able to lend more for infrastructure. To the best of my knowledge, the Reserve Bank has stretched over backwards to give as much regulatory forbearance as possible to enable bank lending to infrastructure sectors. It would not be appropriate, it would not be in the interest of financial stability if the Reserve Bank is asked to further relax regulation so that banks can lend, because that will be a threat to the safety of our financial sector, to the safety of our banks. It was in this, excuse me, it was in that context that Governor Rajan said yesterday that if indeed the priority is for investment in infrastructure sector, in order for that to happen, instead of asking the Reserve Bank to further relax regulation, give more forbearance, the government should subsidize. Okay, it was in that context that he said it. Governor Rajan would have explained it much better, but it's okay.
Good evening, sir. My name is Jitendra. I'm a chartered accountant. One of the motivators you have explained to write this book is challenges what you have faced as a RBI governor. With the presence of Monetary Policy Committee that comes in great conflict with independence, which will apprehend how you visualize the present Reserve Bank of India governor would face the music before MPC.
Now you're saying that it will create a conflict?
My worry is so far our understanding is that our strong backbone for the economy is RBI governor.
Right.
Today, with the political, with Jairam Ramesh comment, when I heard, I did not read, I was following when you were writing. We are all concerned about the political parties influencing the monetary policy would impair the economy in 1030.
No, I understand your concern. Monetary policy decision making through an MPC has been established as the best practice. Experience from several mature democracies, from several advanced economies shows that a decision by a monetary policy committee is better than a decision by an individual as the governor. It's not a new idea. It's an idea that has been floating around for a long time. Those of you who've read my book would notice that that was one of the questions that Mr. Chidambaram as finance minister asked me when he was interviewing me for the job of the governor, what I thought about an MPC. So it's not one government, one central bank governor, one finance minister who thought about it. That's been an idea that's been floating around for a long time. Mr. T.L. Shankar is here. He was a principal secretary, my boss for many years. He used to say that lots of these ideas have to float around for a long time before they get concretized. We've been talking about GST for about 20 years, right? So similarly about the MPC. Yes, in the Indian context, given the fragility of our institutions, given that our democracy has certain weaknesses, it's quite possible that the MPC may not work as best as it should. But I think we should give it the benefit of the doubt, believe that the governor, being a wise and experienced man, will steer the MPC to making a wise decision. I don't think we should evaluate the MPC by preconceived notions. We must give it a fair trial. Some ladies, women, yes ma'am, you've been raising your hand for a long time.
Good evening, sir.
Yes, good evening.
Sir, I am a student of journalism at English and Foreign Languages University. Thank you so much for enlightening us. Sir, my question is, when Mr. Jairam Ramesh used the term political masters, don't you think that RBI is really enslaved by the Indian government?
No.
Don't you think that the government has a much say to move the interest rate or to mold the interest rate according to their interest?
No, I don't think so. No, Mr. Jairam Ramesh used that political masters. I said in my comments that I don't understand the context in which he said it. But to believe that the Reserve Bank used a very strong word, enslaved by the government, I think is a complete misrepresentation of the actual state of affairs. I know from before my time, I know during my time, and I believe it's been true even after my time, that the Reserve Bank as an institution and the governor as an individual have been acting in what they believe is the best public interest. They may have made mistakes, they may have made errors, but those were judgmental errors, not because they succumbed to pressure or because they were enslaved by the government.
As you worked with one of the economic reform and father of Indian economics, Mr. Manmohan Singh, sir, and right because of that reforms, now India is on this stage of now India has shifted from a hesitant economic power to a confident player on the international stage. And how global rules and markets are shaping India's rise on international stage.
What is the question?
Yeah, actually, how global rules and markets are shaping India's rise on the international stage.
Yeah. Thank you. Good question. You know, in my comments, you might recall that one of the things I said was that there was dismay, disbelief in India that we could be affected by the crisis. Why was even educated people, even Reserve Bank staff were surprised, dismayed that we could be affected by the crisis? They said in 1997-98 we had the Asian crisis. India was not affected. In 2007-8 we are having the global financial crisis. How come India is affected? What happened in that intervening 10 years? Did India change? Yes, India changed remarkably. Between the Asian crisis of 97-98 and the global crisis of 2007-8, India had integrated into the global economy, both by way of trade, and more by way of finance. The reason we were affected by the global financial crisis, even though we were not affected by the Asian crisis, was because India had built linkages with the global economy. When you globalize, when you integrate into the global economy, there is both rewards as well as threats. Indeed, we had a golden period of growth, right? In the pre-crisis years, we clocked average growth of 9.3% in the 3 years before the crisis. That was largely part of the global phenomena at that time. The world was growing, India was growing also. We grew much faster, of course. But then the crisis came and hit us. So globalization is a double-edged sword. Okay? It gives you enormous benefits, but it also imposes ruthless penalties. You've got to be prepared for that. So one of the things that India has to be prepared for, some of you youngsters, you're an economic student, so you're going to be part of this country for many, many years, many decades. So what you have to understand is that we have to be prepared to manage globalization to our best advantage, to minimize the costs of globalization and maximize the benefits. That's the challenge for the Reserve Bank, that's the challenge for the financial sector, that's the challenge for the country, that's the challenge for the government. Importantly, that's a challenge for youngsters like you. Sure, of course.
You had stated, good evening, you had stated that it's not unusual for central banks and governments to have conflicts. In India is that there is no mechanism for resolution.
Right.
With your kind of overview of global economies, what is the kind of mechanism of resolution that exists in other developed economies which we could perhaps adopt?
That's a difficult question. You know, some of you may have read the Alan Greenspan's book, what's the Turbulent Years, I think it's called. The Age of Turbulence, The Age of Turbulence. Greenspan writes there that the first President Bush was not on talking terms with him for the entire 4 years he was president. Greenspan is a fan of President Ford, who appointed him first. And he says President Ford in the 4 years had not invited him to even one White House event. And President Ford actually said, after he lost the election in 1988, I think, that Greenspan was responsible for his loss. So every country, there is conflict between the head of the government or the government and the governor. But that did not, Greenspan nowhere said that there was pressure on me to act in any way. He said that public officials made comments about the Federal Reserve's policies, but nowhere did he say that there was pressure on him to act in any way. So I think the way we need to resolve this is that we need to manage those differences behind closed doors. You know, in one of those book events earlier this month, Mr. Chidambaram and I were sharing a forum. It was very magnanimous of him to share a forum with me on my book when I had not been uniformly charitable to him. One of the things he said was that the central bank, the Reserve Bank, is a public institution. What it does is public policy. People have a right to criticize. You cannot deny that right to people. I agree with him completely that the Reserve Bank is a public institution, it makes public policy, and it is got to be open to criticism. But one party that has to deny itself the right to criticize is the government. The government should not criticize the central bank in the open. The government can tell the central bank governor, advise the governor in closed meeting, give their point of view. The government certainly is a stakeholder, an important stakeholder. I'm sure that governors all along, and certainly I have paid great attention to what the government says, their point of view. But the government should not comment on central bank policies in the open. So while everybody has a right, indeed the government has a right, the government should deny itself that right.
In August of 2011, rupee was at 44 or sometime. Today it is 67.
Are you in the markets?
Yeah, I'm in the
okay.
markets.
Yeah.
So, which is close to 50% knockout. Now, is that not directly an indirect way of importing inflation? And second, which is running very parallel to the RBI's agenda of inflation management expectation?
Okay, true. 44 in August 2011, I take your word for it. 66 today, that's 50% depreciation, certainly. And to the extent that your exposure to the external sector, there's a technical phrase for that, I forget that now. You do import inflation when through the exchange rate. Okay, that happens, that's inevitable. Ours is a partially open economy, but even in a partially open economy, it does impact inflation, but that's inevitable. Okay? In an economy that's been running a current account deficit of over 4% year on year for 3 years, to believe that you can maintain the rupee at 44 to a dollar is unrealistic. It had to weaken to reflect the reality of the economy, and that's exactly what happened. It would have been futile on the part of anyone, certainly on the part of the Reserve Bank, to prevent that depreciation that had to take place. It was inevitable that it had to take place.
As we have read in the paper, we have supply side inflation. So how RBI can control it?
We have what? Suppressed inflation.
Supply side, short supply.
Supply side inflation. Yeah, that's a technical question, but I will try and respond to it in as much of a non-technical language as possible. There are several drivers of inflation. Inflation happens for many reasons. One of the reasons, for example, is food shortage, food distribution problems, oil prices going up. That also could drive inflation. Those are called supply side drivers of inflation. And contrast to demand side drivers of inflation, like there's too much demand, for example, that's demand side pressure. The orthodox view is that when inflation is driven by supply side pressures, for example, food shortages, oil prices going up because of conflict in Syria, the Reserve Bank cannot do much about that inflation because monetary policy cannot do anything about supply side. It's for the governments to tackle supply side. So the question is, can the Reserve Bank do anything? In the first order of things, the Reserve Bank cannot do much. But the Reserve Bank cannot sit back and watch inflation play out. The reason is that no matter what the driver of inflation, if inflation persists for long enough, inflation expectations harden, which means that inflation happens because people expect inflation. Today, inflation is 6.2% or whatever, right? If the entire country, or maybe in this Manthan group, we decide that tomorrow inflation is going to be 7% or 7.5%, and we behave as if inflation is going to be 7.5%, we can actually generate inflation of 7.5%. So the concern of the Reserve Bank is that even if inflation is driven by supply side pressure, the Reserve Bank must prevent inflation expectations from getting hardened. That's the reason they act with monetary policy. So there is a role for monetary policy, there's a role for the central bank in managing inflation, even if that inflation is driven by supply pressures.
Sir, very, very heartily good evening, and I heartily thankful to Manthan that a very beautiful good evening for question answer. My question is that the gold and silver is market decreasing, not gold and market. Day by day it is increasing. And second question is my gold prices increasing day by day. And second question is that yeah.
It's very high, and I don't think the Reserve Bank does anything about the price of gold.
The second question is, sir, second question that black gold, kala sona, and gold was yellow pila sona, platinum was in white gold, and that green gold, can you give some for green gold?
No, I can't give any green gold, but I was flippant about your first question. I want to give a more serious response. India has great demand for gold in our country. We all understand, right? It's called the Indian folklore demand for gold. Why do people invest in gold? Because that's the only avenue for saving for them, right? Poor people, low-income households, they have no other avenue of saving. They buy gold because gold is liquid, gold appreciates, gold can be pledged as collateral. If you're in a village and if your child falls seriously ill in the middle of the night, the only way you can raise 5,000 rupees is if you have gold, right? That's the reason Indians invest in gold. There are, of course, other reasons about in times of inflation, people tend to buy gold because that's a hedge against inflation, which is what happened in 2011 and 2012. The Reserve Bank does monitor the price of gold, but it cannot do much about it. It can do something about managing the demand for gold by managing inflation. Thank you.
Yeah. So good evening, sir.
You're staging a walkout? Yeah.
So good evening, sir. My name is Nikita. We are from Voxen School of Business. So we appreciate your presence here today, sir. So my question is, like, you have a great experience in public sector banking. But sir, in today's scenario, why the public sector banking lower than the private sector bank growth? In fact, why the public sector bank growth rate is lower than the private sector bank growth? In fact, the public sector have, they have accepted all the monetary policies, they have cleared their balance sheets, their financial statements, but still the growth rate is lower than the private sector bank. Why? According to you, sir.
You're talking about present times?
Yeah, to the present times, sir.
Yeah, it's quite straightforward. Public sector bank balance sheets are more stressed than those of private banks, and therefore, in order to repair the balance sheets, they're more cautious about lending further. Because private sector banks are not as stressed, they're able to lend more. But why indeed did public sector banks come under greater stress? Why indeed their balance sheets got affected more than private sector banks? There are lots of conjectures about it. But I don't believe that it is because of weak management. No, we have some very talented professionals managing our public sector banks, and I don't believe it's for want of capacity. It's for many other reasons.
I said all good things must come to an end, including the working of this mic. You've been very, very patient with us, sir, and you really clarified many of the dilemmas which we thought that you were going through. And thank you on behalf of Manthan, on behalf of each one of us in the audience, for being so patient and for clarifying many of our questions. Thank you, and please do come back because it's a unique occasion for us. Nearly 10% of India's central bankers are with us. There are two of them here.
Thank you very much.
Thank you very much.
Thank you.
Thank you.